Okay, I'm not sure if we're live on Facebook, but we're live on Zoom, so let's begin. Więc witam wszystkich Państwa w 17. już odcinku z serii We Innovators. Zastępuję dzisiaj Bartosza Sokolińskiego i Pawła Packa. Obydwaj są na zasłużonych urlopach i chciałem tutaj również poinformować, że nasza seria również udaje się na tego typu urlop. Jest to ostatni webinar w lipcu. Wracamy w drugim tygodniu, w środę w sierpniu. Naszym gościem będzie profesor Mauricio Zollo. My w międzyczasie nie próżnujemy, planujemy kolejne webinary, umawiamy kolejnych gości, tak więc jeszcze w sierpniu i we wrześniu już mamy dla Państwa plany, ale o tym opowie Paweł Pacek i Bartosz Sokoliński na następnym webinarze 12 sierpnia. Tymczasem zapraszam pana Mariusza Kowalskiego, który przedstawi naszego gościa. Zaczynamy.
So hello everyone. Now let's switch to English. My name is Mariusz Kowalski. I'm a deputy chair of the MBA Alumni Association of the Institute of Economics of the Polish Academy of Sciences. And I'm absolutely thrilled to introduce you to our guest, Raghu Bhargava. Raghu is an award-winning serial entrepreneur and CEO of Global Upside, part of the Global Upside Corporation. Brands providing the most comprehensive range of staffing, PO, incorporation, HR, accounting, payroll, and M&A services across 150 countries. So that's about Raghu, and I should add that I have both pleasure and privilege to have been sort of cooperating with Raghu already for a number of years. So it's also a very good sort of personal connection. And Raghu will tell us how to expand from garage to global. Raghu, the floor is yours.
Well, thank you, Marcin, for the introduction in Polish, and thank you, Maurice, for the introduction in English and the kind words. I do appreciate this opportunity to be presenting to this crowd of listeners, not just in Poland, but wherever you might be streaming from. And the topic is obviously expansion considerations. And when you are looking at expansion overseas or even domestically in a large country, the things you have to worry about most is where do you go and why do you go there? The question of why is more important than where, because people expand for many, many reasons. For example, there's a lot of American companies that are coming to Poland, to other parts of Europe, because there's a lot of talent there. So if you are looking to set up an R&D center, you want to go to a country like Poland and build that talent pool or capitalize on the talent pool that is available. But if you are planning to set up some kind of a high volume manufacturing facility, Poland may or may not be on your top priority list. And you might be looking at countries like China or others. And we'll talk a little bit more about that towards the second half. But once you know why you want to go to a particular country, then you have all these questions about what all do you need to get going. So if you're going to hire a lot of people, then, question number one is, how do you start? You need to hire most probably a country manager or a senior manager that can help build the team, and a person who will run that facility, not just from like an administrative perspective, but also from an output perspective. So an R&D team might be managed by an engineer, but a sales team, if that's your center for, say, the European Union, that might be somebody who has a sales background. And how do you find these people? So finding the right talent, extremely important. You make the wrong hire as your first hire or first few hires presents a challenge, ongoing challenge. And then also, how much autonomy are you going to give this individual or this set of operations? Is it going to be sort of a centralized model where the powers, real decision making powers reside with the company in the headquarters, or is it going to be regionalized or decentralized where the local head has a lot of decision-making authority? Now, once you have made those decisions, then you have a few ways you can go into a country. The smallest footprint you can have is a rep office. A rep office basically is one that you're establishing to do some market research. And typically, the governments limit what a rep office can do in their country. So, and there are time limits on how long you can have a rep office. So for example, in Singapore, you can only set up a rep office for 1 year term, and you can get a 2-year extension on it. So no more than 3 years can you have a rep office, because the government says, look, at some point you got to either want to do business here or not. You can only do so much exploration before you actually have to make that decision, move on it. But if you have clarity in terms of what you're trying to accomplish in that country, then a branch or a subsidiary is the right answer. Obviously, subsidiary is always the best answer, because to the local candidates that you're going to recruit from, the local talent pool, to the landlords you're going to rent facilities from, to the suppliers that you're going to buy other services from, to your clients if you're going to sell locally or hire salespeople, it is sending a clear message that you are here to stay. You have a permanent establishment. You're not a fly-by-night that, hey, listen, if tomorrow things get tough, we just pick up our bags and go. And it is important to send that message, because that garners loyalty and commitment from both sides, the buyer and the seller. And so you can set up a subsidiary. Subsidiaries take anywhere from 1 day in a country like Australia to 3 to 6 months in a country like China. And that's based on local compliance requirements and everything that you have to do to get the entity set up and registered. Now, there is always one other option in terms of setting up an office overseas, which is what in the US is known as professional employment organizations, PEO, or mostly out of the country, out of the US, it's known as employer of record, or EOR, where you can identify a candidate in a foreign country. You can put them on somebody else's payroll. So on their paycheck, it actually says the name of the employing company, but their business card, their email address, their phone, everything, and their day-to-day management and delivery of their services is managed by the client. And what that does is it eliminates the need to have an HR, payroll, accounting, presence, system, people that can manage that, and you may or may not know about the laws and compliance requirements of that foreign country. All of that burden is being transferred over to the employer of record provider, and all you have to worry is about finding the candidate. Now, as you start your operations, whether it's through an EOR or through your own subsidiary or rep office, you obviously have HR considerations. When you hire somebody overseas, you have to worry about the local laws. So just like in Poland, you couldn't just do an English contract. It has to be bilingual if you're a foreign employer, so that your foreign management actually can read and understand English. And from a local perspective, it is in Polish. And the local employee candidate can read and understand that. And those bilingual requirements exist in many, many countries, in Europe, France, Germany, Russia, Ukraine. These are great examples. Japan, obviously countries like Singapore, Australia, English-speaking countries, you don't need to worry about things like that. And then you also have to worry about is how are you going to pay these people? So you can engage with a payroll service to do your payroll, but how do you get the money into that country? And there are countries that have serious limitations on your ability to bring cash in, like China, like Serbia, like Russia. So you need a local bank account to be able to pay the employees. In some countries, you're able to wire the money to the employees as well as to the government for net payroll as well as for payroll taxes. But you got to make sure you address those needs up front in terms of your setup, so that you don't get into that position where you have an employee and it's time to make payroll, but you have no means to pay that person. Obviously, depending on the footprint you have, it creates what's called permanent establishment or a tax presence, so to speak. And this tax presence is important because if you establish permanent establishment, you will have to go in and file a tax return at the end of the year. If you don't have a permanent establishment, you may not need to file tax return and comply with other requirements. Part of this is also intellectual property. So if you hire contractors to do your development work in a foreign country, it is quite possible that the intellectual property that they're creating now actually belongs to that contractor and not to the company that is paying for it. So you need to make sure you have proper agreements in place with the contractor, so that even though he's doing work for hire, the product belongs to the company. Having talked a little bit about the setup issues, let's go over into the employment law. And I touched on it about, the bilingual requirements. And I'm sure you guys are very familiar that in Poland, as an example, employment is a matter of contract, not at will, which is very different in a country like US. And I think US is the only country which offers employment at will. So you can walk over to a employee and say, hey, listen, we don't want you to work here for whatever reason, and you can stop coming. You can leave now and stop coming tomorrow. In most countries, you have to give notice by contract. You have extensive severance requirements, things like that. So those are considerations that you have to think about as you think about hiring and scaling up, as well as if you have to somehow, for some reason, downsize. And it's not just about downsizing because of economic activity, but it could be that you have an employee that is not performing. So a sales guy who's not being able to sell, you are going to let him go, but how do you make that happen? And there's lots of requirements around that also. Most countries have collective bargaining agreements or works council, and many times it works to your benefit. Certain times it does not. So, for example, in Sweden, if you're party to a CBA, collective bargaining agreement, it negates the need to deal with each employee as a bargaining unit. You negotiate with the union or the CBA, and all the employees then fall under that. And it does facilitate a lot of, makes easier to do business and negotiate. Working time regulations are extremely important because you have to comply with the local requirements of overtime laws and what is allowed, not allowed to work. In France, you cannot work the weekend, and stuff like that. In California, as an example, if you work more than 8 hours a day and you're a what's considered an exempt employee, or you're paid by the hour. If you work more than 8 hours, you have to be paid overtime. If you work more than 40 hours a week, you have to be paid overtime. If you work on a holiday, you have to be paid double time. So there's all these rules that you have to worry about around what are broadly known as working time regulations that govern so that you don't take advantage of the employees. Obviously, hiring is the right hiring process is important, as well as the right exit process. So this way, you are not sued for employment practices, and you have by executing to the right standard, to the right contract and the law of the country, you are making sure that there are no breach of your contractual obligations on both sides, the employee as well as the employer. Now that you have employees, you also have to worry about benefits, because most employees, even though in many socialist countries, you have a nice infrastructure that provides you good support, medical care and things like that, most employees are now getting used to having what are called supplemental benefits. So obviously the social structure provides you the statutory benefits, whether the employer pays for it, whether the employee pays for it as part contribution. And those are standard and mandatory, and no company can get out of it. But if you want to attract the right talent, you may need to offer supplemental benefits, or what's also known as customary benefits. So in technology, you might offer a lot more benefits versus, say, in a manufacturing environment, things like that. Beyond employment law, there's obviously requirements of company law, compliance requirements. And for example, you need to have a registered office. It's an office address that is provided to the government for your registration purposes and things. And that office has to be manned from, so to speak, 8 to 5 or working time, so that if somebody wants to give you notice or the government wants to send you a message, they can a letter, they can send it to that address, and they know that it will be received by the company or a representative of the company. Now, in some countries like Spain, some of this is moving over to an electronic system where you have to have a registered email address, and the government then sends communications to that email address. Obviously, it's a much better way, but much better, faster way to communicate. But then again, the requirement of the registered office hasn't gone away in Spain. Many countries require a resident director. Again, somebody who lives in that country, so that if something goes wrong with the business, somebody is there to represent the company, and somebody who is not a foreigner, where they can just get up and go, and the country, their citizens, their businesses don't have to chase somebody in a foreign country, which becomes extremely impossible and sometimes extremely expensive and sometimes impossible because of extradition laws and things like that. We're obviously very familiar with GDPR, came out a couple of years ago, and it is obviously at that point, GDPR was the most stringent requirements for privacy, for protecting your PII. However, since then, many states in the US, many other countries have adopted similar regulations or are in the process of adopting similar regulations. So when you're within the EU, you are very familiar with the requirements. But if you go into a place like California, the requirements are different. They're actually a little bit more stringent compared to GDPR. So you have to worry about making sure you comply with those policies, even though you are compliant in the EU with GDPR requirements. There are tax requirements from both indirect perspective as well as direct perspective. So direct taxes are income taxes. Obviously, if you're making a lot of money, you may have requirements to pay estimated taxes during the year, and then obviously true it up when you file the income tax return at the end of the year. But indirect taxes like VAT, GST, PST, HST, sales tax, a whole bunch of alphabet soup out there. And those are applicable in many, many countries. And they may have, depending on volume, monthly, quarterly, annual filing and payment requirements. Statutory audits are required in most countries because it is not an independent audit as typically done by the Big Four, but it is a statutory audit which complies to a different standard, a standard set by the government to ensure that not only that the financials are properly stated, but also that the company complies with certain laws and regulations. And then you take the income tax return and the audited statutory financial statements, those kind of things. You have to prepare an annual report that you have to file with the registrar of companies or the equivalent authority in that country to stay compliant with the reporting requirements of that country. Maurice, are there any questions at this point? I know I've gone through about 10 minutes of 20 minutes of conversation.
Yes, we have a couple of questions, maybe let me start with this one, because you touched upon, Raghu, at the beginning of your presentation, the question of the local presence, that it is important. And actually, one of the questions relates to this. and there it goes. How important is the local presence in expansion approach based on value-added resellers approach, or ecosystem approach, in other words? The product is a complex tech solution, which is intralogistics platform based on mobile robots, and ideal partners are factory automation, integration, present or on local markets. And in this case, partnership pack includes pre-sales support, education, third line support, localized sales support, materials, backed by digital activities focused on building brand product awareness on targeted geographies. So what would you say? I mean, how important is the presence in such case?
Well, so I'm not sure I understand all of the questions about your particular product, but the more complex the sales cycle or the more complex your product offering, it increases the need to have a physical presence in that country, because you can then train your people to be experts and provide them the logistical support that they need to make that sale and do a demonstration if that is required, or part of your sales process, or show the product, things like that. Obviously, if your product is a little bit more simplified, then a channel strategy or a reseller strategy works great. Because what you can do is you can then have somebody from the reseller's office come to your location, or send somebody to train a team at the reseller, and then you can supply them some sample product, you can supply some demo units, and then they can work with local customers, local clients to buy and sell. What that does is you are getting that local expertise, because the value-added reseller has a presence. You're also getting that reputation of that value-added reseller associated with you, because they might actually have the right connections in that country, in that field, so they can garner more business than you can sitting overseas. And also, it depends on your strategy a little bit, because some companies actually rely a lot on a channel strategy, broadly speaking, which encompasses value-added resellers, versus other companies say, hey, we want to have a direct channel to our customers, we want to build a big sales force, we will have salespeople in each country and sell locally. So a little bit of it depends on your product, the complexity, but and a little bit of it on how you see the market, how you see you can sell into it. Obviously, when you do a value-added reseller, typically you're going to pay somewhere between 20 to 50% of your top line to that reseller for his efforts. Obviously, when you hire your own people, you have to set up the infrastructure, you have to hire these people, you have to cover their salary, whether you have a sale or not. And then you have to pay most probably some commission on that sale. So all of that comes into play cost-wise. And the last point is servicing. So if your product needs servicing, that has to be serviced either live on site or by shipping the product back, fixing it up and reshipping it. That may or may not be possible in a direct model, because you may not have the full facility, but a value-added reseller may have the facility to do, say, level 1, tier 1 support, whether it's on a hard product or a software product. Obviously, software products can be serviced remotely from any place typically. So that does change the outcome of how you're thinking about setting up your operations.
Thank you, Raghu. And we have another question. We've got a couple of them, but one is from a technology company with global expansion plans. And the question is, how should they fund their expansion? Should they go to raising venture capital in the target country, or rather first build business in that country, and after demonstrating track record, then raise capital. How can we build a new business in a new country if we have no credibility in this market? And the question is specifically asked with respect to the US market.
Yeah, so the US market is a little bit unique in that respect because it is obviously the largest economy. There's the largest amount of sellers want to come here because people in US are more open to dealing with a company that has no credibility, so to speak, because you're a Polish company and we don't know who you are. We have never heard your name and stuff like that. But we as Americans are very, very open to dealing with foreign companies or companies that can solve our problem. So if you have a solution that makes sense for us, we have no hesitation in buying it, even though we might be your first customer. So how do you get there and how do you do it? And should you raise the VC fund before or after? And a little bit of it depends on how much capital do you have. Are you well capitalized or are you thinly capitalized? If you don't have enough money, obviously raising money is important because how else would you find and hire somebody in the US and manage them, because you as the CEO or you as the head of sales may need to travel to the US to interview, to hire, to train, those kind of things, or bring that individual back to your home country for training purposes and things like that. Raising money with VCs always helps if you have a track record. If you can show that you have sales, even if they're local sales, domestic sales. And in the case, if you are a Polish company, if you're based in Poland, maybe having sales in the broader EU arena will establish in a VC's mind that you don't have a product that only 3 people in the world need. You have a product that more people are willing to buy and consume, which means your value is higher and you're not going to be giving up a larger piece of your equity to just raise that capital. Also raise the capital that you think you really need. And I'll give you a very interesting example. About 25 years ago, to do a global expansion, whether you're coming from overseas to the US or going from US to overseas, you needed millions of dollars in the bank. It would cost you, for a global strategy to be implemented, it would cost you $25 million or some large number. About 10 years ago, 15 years ago, that number dropped to about 2.5 million. So it dropped by a tenth or 90%, sorry. Now, to go into a foreign country does not take a whole lot of money. $25,000, $30,000, $50,000, you can go into any one country and you can multiply that. Now you have to think about the longer term perspective, because you say I have $50,000, I can go into 2 countries, but what happens in 3 months when you have consumed your $50,000 in salaries alone, or setting up the entities and stuff? Because as you set up your entities, it does become very expensive. Now in the US, obviously the PEO model is very, very popular in the US. So you can just hire somebody without establishing your organization and stuff and things. And you can sell from overseas with that local representation. So it can become a nice way to enter into a market without having to raise millions of dollars.
Perfect. Thank you, Raghu. And you also touched upon compliance issues in your
Yes.
presentation. You mentioned that it's actually important to take them into account because they differ. And we actually have 2 questions which I think sort of relate to this. And I will, since they are a bit similar, I will address them jointly. So one is about sort of how to sort of limit or address a risk of employment or exploiting children in so-called third world countries, which is sort of one thing. And then another question is, in some countries, professionals are actually sort of forced to work as sort of freelancers or self-employed instead of being employed and having employment contracts. It's actually quite common in Poland. So what are your views on these topics?
Yeah, the employing of children, well, first of all, at least as far as I understand, the employment of children is very common in manufacturing or labor-intensive industries where you can put a 10-year-old to work, like in farming or clothing and stuff and things. And the only way to avoid this is to know who you're dealing with, because you're obviously having somebody do contract manufacturing for you. And how do you know that they're not employing children to do the production of your goods? Now, if the price is very low compared to other suppliers in that country, you know that there is something not quite right. If it's too good to be true, it is most probably too good to be true. And they're cutting corners, employing children, whatever they're doing to make that happen. The best approach is to go visit their site on a regular basis. Depending on the volumes, you may even put somebody on site to monitor that on a regular basis. Somebody in that country who's your procurement specialist, who is not just controlling the quality of the product that is shipped to you, but also watching out who's producing that product. Is it children? Is it adults? And are they properly being treated or not? That's one way to think about it. Now, the other part of employing people as not as employees but as contractors or freelancers, it's kind of the same issue. It's a philosophy that you as the owner, the CEO, the executive of the company wants to drive. So, for example, at Global Upside, we have about 1,000 people working for us in about, 50, 60 countries. And our philosophy is, hey, you want to work for us? You have to be our employee. We do not employ contractors or freelancers. Now, obviously, from time to time, we end up doing that just because we need some development effort done on a particular thing where this person, really, we don't need him full time. We just need him for a month or 2 months. So yeah, come on in, develop the product, and you're going to leave in 2 months. But that's a very short-term project, not somebody that we're thinking like, hey, you're going to work for us for the next 5 years or a long-term basis. So it is a top-down approach in that respect of managing and dictating how you want to employ people. And when, a little bit of it can be pushed back from the freelancer, but typically their ability to push back is very limited because obviously you need a job and the company says, hey, I'll pay you this, but you have to work as a freelancer. What are you going to say? No, you need a paycheck, correct? One way or the other. So it is really the employer's responsibility to ensure that they're treating the employees fairly, employing them properly, and contributing to the social charges, things like that you're required to do.
Very good. And speaking about compliance, you also mentioned data protection.
Yes.
Which is a major, can be a major issue. And we actually have a question related to data privacy. And the question is, how do you deal with data privacy when entering the US and potential liability related to it? So let's assume that your product will process consumer personal data, there is a security incident, and are there means to limit legal responsibility? Should we buy insurance, for instance, or where would you start?
Yeah, so in the US, you can get privacy-related insurance for hacking and things like that, where it's improperly lost, and you can get that insurance. But before you get to that, it's really important to understand what information are you gathering and what are you doing with it, because a lot of data privacy violations are coming about. Well, some of them are obviously because your server got hacked and somebody stole the data, and now they are selling it to the highest bidder out there on the open market. But what companies are doing is, so Maurice, you and I have known each other for, 7, 8 years, 10 years, something like that, long time. I could take your data and sell it to somebody like, hey, I know this guy and you can sell him these products. And if we start doing that, we are in violation of GDPR because we did not collect your contact details. And obviously I have your contact details like your address and your phone number and things like that, email address. So again, a little bit of it, what are you collecting the data for and what are you going to do with it? So obviously sites like Google, sites like Yahoo, lots and lots of sites collect a lot of data of individuals. Your iPhone collects a lot of data about yourself that they're literally using it for marketing purposes and selling to other marketers. And that is where you have a higher risk. If you are just using it to service, so we use Maurice's information to service him, stay in touch with him, contact him when we need to contact him. That's all business related between him and us. And that does not violate GDPR other than if he says, hey, listen, I want you to forget me. I don't want you to ever contact me. Take me off your do not call list. Yes, then we will have to comply with that request. In the US, like I mentioned early on when you're coming in, yes, states like California have a pretty high bar for these things. Many other states have very little in terms of privacy issues. In the US, unlike EU, we are very cavalier about our personal information. We don't care much. So you can go figure out a lot about, for example, myself, if you just Google my name as an example, because we're not too worried about, hey, who's going to do what and stuff like that. And part of it is also because the way businesses are set up that, for example, if my bank account gets hacked or if somebody steals my identity and gets a credit card in my name, the bank protects me. I don't need to worry about it. What is going to happen? Nothing. So there's a lot of stuff which is a very different way of living, doing business that we exercise in the US. So US is a pretty easy market to enter without worrying about GDPR too much. Just, you can go to our website as an example. And because we are a California-based business, we have a privacy policy that applies to all of our contacts with everybody on the planet. But there is a supplement that applies to California residents. And you can read it, and because we don't ever sell anybody's information, we don't ever market that information, it's easy for us to do. Now we do have a lot of PII because we do payroll for our clients, we do HR support for our clients, we have their tax identification number, banking details, home address, their whole resume, their nth level of detail, but we don't capitalize on it other than to service them from an HR perspective or payroll perspective. So it's a little less concern of ours.
Thank you, Raghu. And we also got a few questions of a more of a general nature. And one is, how to actually pick a country for expansion. Is there any sort of advice that you would give to somebody who is considering, where to expand?
So I really cannot give you blanket advice that you should all go to Ireland or go to the US, because that just doesn't work. Like I said, we have a 60 country footprint. How did we get to that? Obviously, you have to see the need. And the need is not just, does the need exist in that country for my product or services? Or is there something in that country like a natural resource? I'm a copper mining company. Is there copper in that country or not? If not, don't go there because you won't find it. So it's both, what are you going to do in that country from a sales perspective, as well as what are you going to get from that country in a supplier buyer perspective, and what is the ability of that country to scale up. So there might be some small copper mines in Mali as an example, and you are looking for very large copper mines. So going to Mali still doesn't satisfy your need. If you're looking for to build a Java in technology team, and you need your plans are to have 3,000 engineers working for you, well, going to Romania might not help because Romania does not have 3,000 Java engineers. By the way, that was just an example. So you kind of have to evaluate that, do some market research on what is it that you're looking for and which country can offer that. One of the things that we do with our clients is, because we are connected with the economic development bureaus of many, many countries. When you come to us and you say, hey, listen, I have this kind of a need, I'm trying to figure out where to go. Obviously, we have some knowledge base and stuff to help you, but then we say, oh, your options might be US, Canada, and Singapore. So how about we bring in the Economic Development Bureau representatives of these three countries and have them pitch why it makes sense to come to that country or not. And what is happening is, because these bureaus are actually funded by the government, they have access to a lot of research. It doesn't actually cost you any out-of-pocket money to get them to come in and present to you. They understand your situation, they come and present. They can even do a competitive analysis of how does Canada stack compared to US? What are the benefits of going into Canada or going to the US? And this way you can make more informed decision about where to go and how and why, all of those questions.
Thank you. Now I have a question myself. So we are talking about, expanding. So let's assume that, okay, for now, my company operates in a single country.
Yes.
And let's assume that hopefully we expand to a number of countries. So how does it, in your experience, affect the systems and processes? What does it mean to your, accounting, payroll? You operate in one country and then suddenly you are in a number. So how do you actually prepare for this? How do you handle this?
Yeah, that's an interesting question, because when you're in one country, you know the rules and regulations, you can understand them well. You can go talk to your chartered accountant or your CPA, as they're known in the US, certified public accountants. You can go talk to them and understand what you need to worry about. You understand all of the compliance requirements, things like that, all of the accounting requirements. But the rules from country to country change so drastically. So in particular, if you're thinking of US, I jokingly tell people that if you can tell the IRS, the Internal Revenue Service, that your net income was $1 million and here's the tax on it, without keeping a set of books, there is no requirement in this country to keep books. There is no law that says you have to maintain books. Now, obviously, if you need an audit or if you're going public and those kind of things, then obviously the requirements kick in. And those are requirements dictated by the stock exchange, not by the government of the US. Obviously, most countries don't have that. You go to France, you go to Brazil, you go to China, you go to India. India actually requires you to keep hard copy originals. Whether you have a soft copy or not, it doesn't really matter. US, you come to our office, we have zero paper. We're a paperless company. Our contracts with every client, with every vendor, with everybody is paperless. We DocuSign everything. Obviously, there are advantages and disadvantages of every system. But beyond that, you actually have to figure out payroll, for example. Because you're going to hire people in that country. How are you going to pay them? The payroll rules, regulations, deductions, how do you pay the employees? How do you pay the government? Everything is so different. In UK, you're required to, for example, provide mandatory pension plans. In France, there is 15 different types of taxes, and each tax, even though they might be pennies, has to be listed on a pay stub. In the US, there's 3 types of taxes. Payroll is damn easy. You pay twice a month, typically, and on the 15th and the 31st, or every 2 weeks, whatever that might be. And it's a piece of cake. And the government doesn't care who pays, how you pay, and everything. They just want to collect their share of the pie. In UK, you cannot make the pension payment without having a local bank account. So creates challenges with that. And that's the output issue. How do you compute that? Do you know that how to compute it? The deductions, and what happens when the rates change, when the government decides, oh, we are in a pandemic and we're going to reduce the tax burden on the citizens. There are requirements around management accounting, right? You are sending $1 million to the US every month. Do you know where it is going? So you need to have reporting structures built in to your back office to say, hey, I sent you $1 million. What happened to it? Where did it go? Where are my revenues? What are the revenues looking like? Am I making margins? Am I making profit? Or am I just losing money and I'll be out of business in 3 months? Or this is a great investment, our expansion in the US, let's go more. So those are all requirements that you have to worry about, right? We talked a little bit about, corporate income taxes and things like that, or VAT, GST type taxes. Again, you need accounting records to make sure you capture that in compliance with those local rules and regulations, and then report that accordingly. Again, in the US, there might not be extensive requirements, but you still have to worry about it if it may apply to you. Obviously, you need cycles on policies, processes, procedures on your accounts payable cycle so that somebody doesn't send you a fake invoice and you pay it. And this happens very regularly in the US, where you get invoices. People have figured out ways to download lists of companies from government websites. They buy them or whatever, and then they'll just send an invoice. Oh, here is your invoice for compliance with the California state laws. And you just pay it. And they ran away with your money. They didn't do a thing for you. And actually, state of California charges only $25 fee, and you can go to their website and do it in 30 seconds. But did you know that? No, you didn't, because you are from Poland or from a foreign country. Or why even foreign country? You're from New York, the other side of the country for us. And how would you know what the California requirements are? So having the right service provider, having somebody who understands these requirements as they apply to your business and catering to it and taking care of that, extremely important. Hopefully that answers that question, Maurice.
Yeah, absolutely. Thank you. And so just to continue this a little bit, so let's assume that, the company started to expand, we're growing, experiencing rapid growth, and to the extent that we're looking to make a business acquisition. So, okay, if we talk about mergers and acquisitions,
yeah,
what would you sort of highlight as a potential challenge, when you sort of do a cross-border acquisition, when you want to buy a company elsewhere, or even a global company?
I mean, we've talked about a lot of these requirements as to expansion. So you're going to a foreign country and you're setting up your own operations, and now you're turning it around and saying, hey, I know US is a good market for me. I have this competitor. I'll just buy them out, and tomorrow morning I'll have my own operations. Obviously, I have the capital needed and everything. Will create some very different challenges for you. Because as an example, there's multiple ways to acquire a company. You can just go in and buy their client list or their employee base, or broadly speaking, their assets. On the flip side, you can buy the stock of that company. Then what you're doing is you're getting not just the assets, the client list or people or manufacturing facilities, you're actually getting all of the liabilities associated with it. And how do you need to make sure you do proper due diligence to make sure, there aren't liabilities that you're not aware of and you're not accounting for in your purchase price. And all of a sudden, you may have a $2 million, $5 million, $50 million liability that you had no idea post-acquisition. Guess what? You're going to have to pay it because now you own the company. There's also issues about how do you acquire it? Do you want to form a holding company that goes out and buys the target and you are part of that holding company structure, or do you just go out straight out and buy that company things like that. And a lot of this is things that, you have to look at deal by deal, structure by structure to say, how do you figure that out? How will you account for this company once you have the acquisition completed? Do you have a shared service center in Poland that you can service the US operations of this company? Or will you need to maintain that separate division in the US to provide that back office services that you need? And we talked about the centralized, decentralized concept earlier on. And this is along the same lines of, do you want to centralize it in Poland, or do you want to decentralize it in Poland and in US? Or maybe create a shared service center in some other geography, like Philippines or someplace, or India. If you're buying a division of a company, which happens a lot when private equity firms go out and buy divisions of large companies, they have what is called a transition services agreement, or TSA, which says, yes, we understand we're going to sell it to you on July 31st. You will own this, but for the next 1 day, 1 week, 1 month, 1 year, we will provide you these support services. Because yes, you have bought this division, but you don't have the ability to take it over. So depending on what that TSA says, if it's a 1-day TSA, you have a bigger challenge versus if it's a 1-year TSA, because you can build everything to cater to that. So you got to evaluate all of that up front as to how are you going to accomplish that. As it relates to people, and especially if you buy the stock, it's a lesser of an issue because the people are still employed by the same entity. They still have the same benefit plans and everything in place. But if you're just buying the assets, which include the team, if you're buying them, now all of a sudden on July the 2nd or July the 1st, they are employed by some other company, the buyer, right? And most countries have this rule that you cannot take somebody and change their terms and conditions just because you bought the company or bought the assets. You have to maintain them at the equivalent level, not just in terms of cash compensation, but also in terms of all the benefits. So for example, we had a situation, we were helping one of our private equity firm clients. They were acquiring a very large division of Dell. Now Dell at that point had 110, 120,000 employees, and of which I don't remember how many they had in UK, but the client was buying about 300 people in UK were going to come over. So they were in a shared facility with Dell, and that shared facility had a gym. As they were going to move out, they couldn't rent a place that had a gym in it. So how do you make it whole? So then they had to figure out what is the membership for a gym that was nearby. And they said, okay, you can become a member of that gym and we will cover the cost. And that is keeping those people whole because they had that benefit before and you can just take it away. You may have to worry about insurance, non-insurance plans. Insurance plans, health benefits, things like that. Non-insurance plans like childcare vouchers or meal vouchers, things like that. You have to procure those under your umbrella now and make sure that you provide those. Obviously, payroll continuity applies because at the end of the month, especially if you have a 0-day TSA or 1-day TSA, at the end of the month, you may have to make payroll. And how are you going to do that? And then whatever the local quirks might be, because UK is different than US, different than Singapore, different than China. And all of these matter. So for example, in China, when you do an asset purchase, the seller actually has to pay severance if the employee requires it. And then the next morning they show up and work for the similar company, correct? The buyer. And they just got a big payout for no good reason. But that's the law of the land and you can't violate that. Local quirks. Colombia is similar, that you cannot terminate somebody without paying severance. So you cannot transfer their employment. How do you do this? And this is again goes back to that concept of having good advisors, people that can help hold your hand and guide you through that. And sometimes you have to worry about these, from an employee perspective, you have to worry about CBAs and works councils and unions because they have the ability to turn down the acquisition. They just say, hey, in Sweden, you cannot do this. Okay, so what? Now what are you going to do? You can't buy those people. as part of this deal. So those are some of the challenges. And I know we're going to be running out of time here in the next 5 minutes. I just rushed through that, but there's a lot more to this, this issue of mergers and acquisitions.
Thank you. I mean, we actually have one more question.
Oh, yes.
Because we talked about, acquisitions, expansions. Now, a question is about finding the right producer. So it's like a production company that wants to order, they have something to produce. They want to, find a good producer and order this abroad. How would you do this? How would you look for such producer?
So when you say producer, I'm thinking you're talking about hard goods, correct? Not.
I think it's hard goods. Yes. Yeah.
So, when you're procuring hard goods from a manufacturer, and, China has been the manufacturing country for a great part of the world for some time, 10 to 20 years, even though that is starting to change a little bit. But when you are trying to procure something from China, obviously the Chinese government, if you go to their local consulate website, you can find some resources where they can help you put in touch with that manufacturer of that goods, because you don't know who to look for in a country with over 1 billion people, millions of businesses. How do you find the right supplier? Beyond that, as you get a list, you can do some diligence on the supplier, on the producer, manufacturer, by talking to their existing customers, by getting some samples of their product. Obviously, the samples may or may not work for you, because obviously, if Apple wants to get a new manufacturer of iPhones, well, nobody else manufactures it but Foxconn. So how do you get that? But they might be manufacturing for Samsung or somebody, or Google, and you can say, hey, send me a product of that type, and then we can evaluate from there. But a lot of diligence, a lot of site visits, things like that. Their ability to scale, their ability to produce to the need that you project. You need 1 million units a month, or do you need 10 units a month? And how long of an effort, how much of an effort is it? And what we see very, very common is people putting procurement people in the country of manufacture. So those people, because they are local, they have the right connections, they have a little bit more insight into what the local market holds and does. And that allows them to have a better procurement cycle, better system process.
Thank you, Raghu. So we actually have the last final question, namely about possible expansion destinations. So are there any emerging top expansion destinations, any countries that, for instance, after COVID emerged as interesting new markets? Or what would you, do you have any views on that?
Yeah, absolutely. Because we help companies expand overseas as well as address domestic needs. We get a lot of insight from our clients as to what they're looking for to go, and why or why not. And if they switch destinations, why did they do that? So let's talk about a little bit of pre-COVID. Some of the most popular destinations were China. Obviously, we talked about that. UK, Western Europe was very popular because, it's a good market for companies to sell and stuff. So expansion can happen not just for procurement, but for sales purposes. And obviously India, because India has been providing a lot of high-end talent in the service business, more so than in the manufacturing business. Now, since COVID, and some of it is very, very recent with this China exercising control over Hong Kong and stuff, and governments aligning against China, what is happening is it's creating that political instability in that region. And Hong Kong was a good destination also, but it's creating instability in that region. So what companies are now looking at is countries like Philippines, India. India has risen up quite a bit in terms of importance. Philippines, Vietnam, Thailand, Taiwan, which was actually a good destination. People are a little bit concerned about it just because, again, that conflict with China that they have ongoing. So people are trying to distance themselves from China a little bit and go into some of these other countries. from a manufacturing perspective. And India is actually transitioning into becoming a manufacturing economy, supplying to the world versus just supplying domestically.
Perfect. Thank you, Raghu. And now over to Marcin.
Thank you for your presentation. The topic is very complex, and what you said is very practical, surprisingly, and I hope that some of our attendees will be able to apply this knowledge in their own businesses. Also, I would like to thank our attendees for asking questions, and thank you once again for joining us in the webinar, and we hope to see you sometime soon.
Yeah, thank you for the opportunity, and thank you to the attendees for listening and asking questions. And please do share my contact details. And if anybody has any question that they still didn't get answered or want to dive deeper into any of these points, I will make myself available for that.
Okay. Thank you very much.
Thank you, guys. Bye.
Bye.
Thank you. Thank you.